Thank you for joining me this afternoon to talk about Faraday copper. I'll start by firstly drawing your attention to our cautionary statement, as we'll be making forward-looking predictions. So why invest in Faraday copper? We have got one of the largest undeveloped copper resources in the United States in Copper Creek in Arizona, and we have a second project, Contact Copper, which is an oxide opportunity in northern Nevada. We are well financed. We raised $20 million Canadian in May, and that's sufficient to finance our activities through the majority of 2023. And we've got three key strategic shareholders on our register in the Lundin family, Murray Edwards and Pierre Lassonde, and collectively they own approximately 24% of our shares. Some up and coming catalysts for you. We're progressing our listing from the CSE to the Toronto Main Board Stock Exchange, and we expect to be trading our shares very shortly. We'll be commencing our phase 2 drill program on the Copper Creek project at the beginning of November. That's a 10,000 meter diamond drill program. And then we expect our PEA on Copper Creek to be delivered in Q2 2023. While at Contact, we're at a far less developed stage and are doing earlier stage work, including flying geophysics, taking soil samples, and relogging old core. We've now been at the helm of the company for just over a year, and in that time, we've built out a full management team as well as refreshed the board of directors. And we've all got senior company experience, and this is one of our key mantras, is about bringing senior company mentality to the junior world and really bringing the rigor and discipline to the work and how we run this company. So as I said, we raised $20 million in May. As of our last financial reporting, we had $17 million. We've got a market capitalization of close to $50 million and 123 million shares outstanding. So as well as our key strategic shareholders, the former management own close to 10%, the current management have almost 4%, and then there's a combination of retail and institutional shareholders. We have analyst coverage from PI Financial. ESG is a hot topic at the moment, and particularly from my side as well. And how does a mining company lose its social license? And generally, that comes down to technical failures. And I'm a strong proponent that there isn't enough governance in the technical aspect of the business. There's a lot of focus on the environmental, social, and governance, but not on the technical. And that's where we come in and really bring in that strong senior company mentality and making sure that we use empirical data to make our informed decisions. Now, particularly on the Copper Creek project that we're advancing to PEA, we've now commenced our water studies, mapping out the waterways, collecting samples. We've commenced our first community engagement programs as well. And from a governance standpoint, and particularly as we uplist to the Toronto main board, then we've got all of our policies in place now, and they're all accessible on our website. In terms of project timelines and milestones, it's all about delivering on what we say we will, when we will. And so, in little over a year, we've completed a review of all of the data. We completed a phase 1 6,000 meter diamond drill program, constructed a geological model, and updated the mineral resource for the Copper Creek project. And so the next key milestone as we're in the study phase is that PEA in Q2 2023. And then it's a very similar path for Contact, but offset with the aim of delivering a new technical study in 2024. So turning to Copper Creek, we're right in the heart of the southwest copper belt of the United States. We're blessed by excellent infrastructure, unlike some of the challenges projects have in, British Columbia or down in the Andes. We don't have any altitude. We've got paved highways running close to the project. We've got an active rail system that runs through San Manuel all the way north up to Pinto Valley. Importantly, we're not in any residential footprint. We're well away from Tucson. We've got no protected forest, and actually isn't it the San Manuel, or sorry, the San Pedro River system is prioritized for industrial use. There's no agriculture in there, just due to the background elements in there which make it not potable or for agricultural use, and it's prioritized for industrial. Turning to our land holding, we have a combination of private surface, state, and federal land. Particularly in Arizona, having access to private land is key and helps to facilitate the permitting. And so we see this as a combined open pit as well as underground future operation. The 90% of our open pit area is on this purple private land. And then this pink area is a piece of surface private land that we can host the majority of our surface infrastructure for an operation, including mill, tailings, etc. And there's, also importantly, no protected aquifers in close proximity, no protected species, and there's no national forest. So turning to the geology, Copper Creek is a porphyry system. Their main host rock is the mustard-colored Copper Creek granodiorite, and then intruding within that are a series of secondary porphyries. And at the top of these porphyries, we get the copper mineralization associated with these horizontally stacked veins. And then additionally, we have these breccia pipes that then are now exposed at surface. And the breccia pipes are what are the focus of the open pit resource. And then the vein mineralization associated with the porphyries is the concentrated on the underground. It's mineralogically speaking very simple. We've got an outer halo of pyrite grading into copper, chalcopyrite and bornite at depth. So there's no complex speciation of copper minerals. It's a sulfide only deposit, just a very thin veneer of oxide. So we put together the first geological model for the project, and that's helped to constrain the mineral resources. In addition to the geological model, we've also done detailed geotechnical work and factored in all of the comprehensive metallurgical work that has been done on the project. So in total, we've got measured, indicated, and inferred of just over 400 or 425 million tons at close to that 0.5% copper, which yields, over 4 billion pounds of copper. In the M&I category, we're talking about 3.9 billion pounds of copper. And you'll see there that 83% of the mineral resource is in the measured and indicated category, and is testament to the amount of drilling that's been done on this project. And as you'll see there, 18 composites from metallurgy have been taken. It confirms an average recovery for the copper of 92%. And the average concentrate grade is between 33 and 34%. So that's excellent results. And it's a clean concentrate. There's no deleterious elements or nothing that's above penalty grade in the concentrate. So very marketable concentrate. And furthermore, the waste rock shows a really low potential for acid generation as well. And so now, if we look at some visuals of that resource, firstly, the upper diagram shows you the open pit, and you can see these high-grade cores which are associated with the breccia pipes, and then this lower-grade halo of mineralization around those breccia pipes. The strip ratio on this pit resource is 1.3 to 1, so very low. And also, we see a lot of opportunity to expand the resource. You can see that the drill data limits some of the design pits, so further drilling will expand that. And importantly, the 6,000 meters of drilling that we did earlier this year. That wasn't in that resource estimate. And so now that we've got the results back, we are going to be updating that mineral resource estimate as part of our PEA. And so we've got the initial open pit and then followed by the underground. And we're looking at a mass mining. We've got a large footprint of mineralization that extends over a kilometer, over distances of 500 meters and heights of over 500 meters as well. So, certainly applicable for a mass mining method. And also within that footprint of underground, we do have these high grade cores as well. And so as we go into the PA, it's going to be about scheduling and prioritizing those higher grades to improve value. And so what we're looking at as we go into kicking off the PEA is a 30,000 ton per day operation, starting with an initial open pit that would last for 14 to 15 years, and then transitioning into a bulk underground mine with a further 20 years of life. And so, over 30 years of mine life, producing, 3 billion pounds of payable copper. So, as I say, one of the largest undeveloped copper resources in the US. And this shows the grade sensitivities, and so there is the optionality of being able to make a smaller, higher grade, or a much larger operation. And so that's something that we'll be studying as we go through the exercise of the PEA. And then in terms of drill results from our phase 1 program, these were really encouraging, and they've shown that we're getting better grades than what we've got in the current resource model. So when we go through the rerun, we'll look to be increasing that grade. And also we're seeing extensions of high grade outside the limits of the pit as well. So the ability to not only expand the pit, but also when we've done some of these infill holes, you'll see that we're getting grade within areas that don't have any blocks, and therefore further adding mineralization within the pit and reducing that strip ratio as well. And as I said, with further drilling, expanding those resources, which is going to be the focus of our phase 2 drilling. And not only did we see those good grades within the areas of the open pits, a hole that we put out yesterday sort of emphasizes the potential from the underground as well, with over 300 meters at close to 0.9% copper, including 117 meters at 1.13, and then some really high grades, 36 meters at 3% copper, and actually the last sort of 19 meters running over 4%, which are actually outside of that underground footprint that was used to cut the resource off at. So, and also you can see the in the background the blocks behind the drill hole intercepts are in the 0.2, some of them are in the 0.2 to 0.4%, and we're getting grades above 1%. So certainly, real opportunity to increase the grade and expand that mineralization within the underground as well. So that's a, very exciting results from these the phase 1 drilling. As I say, all of this now is being integrated to update that resource model ahead of the PEA. So as well as the PEA coming out of Q2, you will get an updated resource estimate as well. And so now that we've got that resource and the drilling, it's all about bolting all of them and fitting the pieces together. So front and center is the geology, the geological model, and then bringing in the geotechnical, the metallurgical, together with the mine designs and infrastructure and the financial model to deliver that PA. And it's really about using empirical data to make informed decisions as opposed to just assumptions. We've also completed a detailed generative study and a target prioritization exercise looking at targets outside of the known resource area. And one of the key features about this area in southern Arizona is the breccia pipes. There's over 400 have been mapped at surface. 35 have had a drill hole or more, and only 14 are in our current resource. So certainly more to go out there and test. We've now got a structural framework, and it's almost like an egg box. We've got a series of northwest and northeast structures, and what they do is they cause blocks of ground to be uplifted or down faulted. And where they've been uplifted, we see the breccia pipes being exposed at surface, and where they've been down thrown, then there's no breccia pipes. So our highest priority area for testing is this area here called the Rum Breccia area, and that's outside of the resource. So we're busy now working to design drill holes as an initial reconnaissance phase to go and start drilling there. And then furthermore, we've got the drill holes that will be going in to test the expansions to the open pits and start to amalgamate these separate pits into one area and grow it. So, the goal of phase 2 drilling, which at this stage is 10,000 meters, is resource expansion with the open pit, infill drilling within the underground, particularly focused on those high-grade cores to look to elevate grade and grow those high-grade cores, and then starting to test some of the exciting targets outside of that resource area to make new discoveries. So, watch this space. We've got the teams now busy mobilizing to site, and the drill rig will be starting drilling in the first week of November. Well, turning to contact copper, this is up in northern Nevada, another great location, another good mining jurisdiction. Nevada, the heart of gold country, but also, a number of copper deposits there. We're just off the main highway connecting Nevada with Idaho. It's 100% owned property, so good infrastructure. This is a 200 million ton low-grade oxide project that has 78% recovery. It's a simple opportunity for heap leach extraction. And we found that a number of the technical data layers have been missing. We've flown a geophysics survey. We're collecting soil samples. We're busy remapping or relogging the core from the old resource to update the mineral resource later in 2023 and further delineate targets outside of the resource for drill testing in the future. But Copper Creek is our flagship and priority at the moment, and about 10 to 15% of our work is at contact. And so turning to, why copper? Well, with this big transition of decarbonisation and electrification, with the swap over to electric vehicles, use of solar power, then the demand for copper is, really going to increase. We're challenged a little bit in the short term with the current economic crisis and high interest rates and utility bills. But this is a great time for us to be able to really put our head down, de-risk our projects technically, so that when we come out the other side of this crisis, then we'll have a copper project ready to develop and a domestic source of copper to really fuel that transition to clean energy. And so when you look at the comparables and you look at all the projects around the world and you distill them down to the US, there's very few projects in the US that are in the hands of the juniors. And, we certainly stack up well in terms of, one of the largest undeveloped resources out there. And then when you, and a very compelling argument when you look at our valuation with the, whichever way you look at it, of the potential net asset value or the, the pounds in the ground, then, compelling investment thesis to really unlock a lot of value as we move forward. And so in summary, there's certainly a scarcity of development-ready copper projects in the US. In Copper Creek, it's one of the largest development projects out there. This compelling market valuation and, a really experienced board and management team to unlock the value within Faraday copper. And as I've shown you, significant exploration upside to go as well. So I'd like to thank you all for your attention and for listening to the story on Faraday copper.